Everything is down on the last few days. There's a recent sell-off. Gold is down. Bitcoin is down like 20%. We have also stocks like Microsoft that is down like 12%, and also Netflix is down 30%, I think, on the last 6 months. We're going to see all that, and on the second part of this video, we're going to talk about 5 bargains stock you can purchase in 2026. To begin with, we're going to start with this amazing map that you see here with a lot of red the last day. So we have the gold also, which is down. Where did this plunge come from? There's a few key indicators that we have. The first one is that there's increasing geopolitical tensions, which increase the demand for gold. We have also central banks that demand gold, a weakening dollar also. Yeah, there's a few things like that, and also greed. People are greedy, so they need to get a lot of performance from gold, which is not a super performer, let's say. So we will have a market correction, and that is occurring right now. Maybe it's going to be much worse than that, because we've had like gold to 5,000, which is a lot. Maybe it's correct. It is going to correct even more. We don't know. Almost myself purchased these Pro Shares Ultra Short Gold, because maybe it's going to be a lot worse than that. And if you got yourself a lot of gold, maybe you should purchase a little bit as an insurance, maybe. So moving on, we have Microsoft. Microsoft is down, 1 month is down 12%. That's really amazing. 12% down. But if you go check, we have a P ratio, which is around 27, which is really low for a tech company this big, with this big of a moat. Amazing. It's maybe a great bargain. We'll see that later. Then we have Bitcoin too, with the recent sell-off. Everything is selling off, and Bitcoin is no exception to that. Why? People, I think, don't understand really well Bitcoin. It should act as the gold. It should more or less perform like gold in the future, but for now it's like really up and down, up and down. And today, like the last 6 months, is down 33%, which it hits my heart because I love Bitcoin, but it's going to be better in a few months, in a few years. We're going to see that. It's a great entry point for people. It's around 59,000 Swiss francs. Here we have in Swiss franc, maybe in USD is better. We have around 78,000 US dollars, which is a lot, down 10% to the year, 31% on the past 6 months. I think it's a great entry point for people, and a great bargain. It's not on my 5 stocks bargain, but it's an add-on. If you want to add a little bit of Bitcoin, I think it's the moment. It may fall a little bit, but if it falls a little bit more, you're going to buy more. It's simply that. So next we have a few companies that I also looked at a few months prior. So NVIDIA, ASML, and a few other ones. But NVIDIA is around the same as 3 months prior. So nothing really much to say. Just this company is cruising, growing, and eating a lot of revenue. The P ratio is a lot worse, let's say, than when it was with the Trump tariffs. But it was 1 month ago, I think, no, a few days ago, I don't think, it was around 170, which is not a bad price, but at this price tag, 190, I will just hold and not buy more. Then we have ASML. ASML is amazing. I talked about it. I will show you in this video.
So today we have a great news.
Look at the price.
NVIDIA is
Look
officially.
at the price.
Jensen.
Where sorry.
Look at that.
Yeah, it was around, as you say, 564 euros. ASML. Amazing. Amazing. Look at where it was now. 3 months ago, 3 months ago, it was at around 900,000. And now, look at that. What can we say about that? Isn't that amazing? I don't own myself the company, but I wish I had taken some position in April during the tariffs. I hesitated, but I picked NVIDIA in the April sell-off. So not bad either, but it could have been excellent with ASML too. But now I think the company is really getting overvalued at this price. So I wouldn't also buy that stock right now. Let's say recommending less this company. Next, we have 5 stocks. Are they bargains? Are they not? I will say it. Yes, it is a lot bargains. The first one is 5, is PayPal. It's a bargain, but we'll see that it's not really that clear of a bargain. Why? So we have a lot of market share from this company. I think it's like 45 or almost 50% of the market share is owned by PayPal. And there's a lot of PayPal of payments, online made by PayPal. But the thing that is concerning is that the number of people joining PayPal, let's say, is not increasing. And that is concerning, and also because of Google Pay, Apple Pay, that is becoming like common payment now for the people, which is decreasing the payment with the credit card. As we know it, you type the credit card or you use PayPal. So that's why there's growth concerns about this one, but it could be a value trap, but also it's, I think, one of the company you can bet a little bit of money on it, and maybe it's going to be a reversal, and then it's going to thrive a lot more in the future. Maybe it's a good opportunity because, as you see, it's always growing. Revenue is growing, year after year is growing. Earning per share is growing year after year. They also are not diluting the people. They are buying back a lot of shares, which can increase the return for the investor. So that's a bargain, a little bargain, let's say. But we're going to talk more about 4 other companies that are much more bargains than this one. And the next one is Adobe. So Adobe, what they do? So sorry, I just forgot to say that, yeah, PayPal was down like the revenue was up like a few years ago from 2021. It was up, revenue up, but the stock is down, and now is getting really crushed for, let's say, half good reasons. As we say, it's the concurrence like PayPal, Apple Pay, and Google Pay. So next, as I said, where is Adobe? Okay, Adobe is down 36% from the year because of the AI narrative. I mean, I am invested in NVIDIA, so I believe in AI that will, help grow the economy, help grow everything, and increase productivity a lot, so increase profits. But I don't think AI will be in 2 years everything will be changed with AI. I'm not into that also, and this company is getting crushed because of AI, because maybe in a few years you won't be able to do like editing. You won't be able to edit photos just by yourself with Adobe. Adobe won't be needed. That is, I think, not really the case, because there are a lot of group of people working together on Adobe, let's say a professional team of editing that does that. And this is not gonna be, I think it's not gonna be replaced in the 3 to 4 years, let's say, maybe in 10 years, but I think it's getting crushed a lot lately for not, yes, it's getting really crushed over and as you see, the PE ratio is about 17, which is really low, really low. And they've been increasing revenue. The only thing is that they do, I think, no, they do buy back shares, so that's cool. And the revenue, as you say, is growing, but it's growing more slowly than other companies, which can be a factor in the future. But earnings per share are growing. Everything is going to be, I think, better in the future for Adobe. So I think it's a great bargain at this price. So I'll keep an eye on it. Maybe I will invest it, but I don't know for now. So now we have the third one. The third one is Netflix. So Netflix, dead money. Netflix stock takes a div despite record earnings. Everything is said here. So basically, they have a deal going on with the Warner Bros. Discovery Studio. They will buy. It's the deal that is going on right now. They will buy the Warner Bros. Discovery assets, which are the films and the movies and the series of Warner Bros. And that is a huge, let's say, I think it's a huge upgrade for Netflix. It's getting crushed on the markets, but I think it's not a good crush. If you look at the stock, it's down around, on the last 6 months, 30%. And yes, it has a high P ratio of 33 because it was growing a lot. If you look at the 5 last years, also in late 2022, it was a great bargain. I hesitated during I don't know where it was, like 2023, to buy around here, but then I assumed it was not growing, that it will. I assume it was not that great of a company, but look at the growth. It was going every year, and Netflix is one of the things, you buy Netflix, you buy your subscription, you set it, and then you forget it, and you pay, and everybody, and you can increase the price. Maybe it's like $15, then you increase from $1 to $16, and all the users will pay because it's automatic. They even don't think about it. The users are just like, man, it's amazing. I just pay $15 and I get a lot of movies, a lot of series. So, and the Netflix original series are just an asset that is, I think, accumulating. the more you have it, the more you can retain users. And now we have come to a stage that Netflix is international, which you have Netflix series original from all over the countries, which is a huge asset for Netflix. And I don't think it's going to slow down. Even in bad times, I think people will always be watching Netflix. Even if they are low on budget, they will go to Netflix and watch series and TVs. They will recomfort themselves in Netflix. And that is the huge quality of this company. Yeah. So as you see, company is getting crushed 30%. But look at the financials. 30% on the last year, but is growing like more than 10% per year. Revenue, amazing. Also, the earnings per share that was growing a lot, like more than, I think it's like 25%, something like that per year, which is amazing. And they don't dilute. No, they don't dilute shareholders. They stay more or less the same right here on the last 5 years. I think it's really an amazing company and a great bargain. Let's go to the other one. As we saw it, we're going to be quick here. It's Microsoft. Microsoft is down 12%, but nothing changed about the company. They integrate the AI with Gemini greatly. Now Gemini is one of the best models out here. So everything is going greatly for Microsoft. Sorry, Gemini is for Google. Oh, what are they saying? They are increasing prices on their subscription. They use Copilot, so it's ChatGPT. Sorry, they implemented correctly ChatGPT. Now I'm gonna get it right in all their tools, and I think in Microsoft 365 it's a great asset to have ChatGPT Copilot because you can use it in Sheets, Google Sheets, Google Sheets, in Excel. You can use it in Word. You can use it everywhere everywhere you can use it. It's really a great tool that will enhance the company, that will enhance the companies and everything. And I think it's getting crushed for partially no reason for me. But yeah, amazing bargain also at this price because yes, sorry, I'm going to the summary. Going to summary up. Yeah, P ratio is around 26, 27. For a company that great, 27. How can you buy something that is 45 PE when you have Microsoft at 27? It's sometimes, I don't know, people are doing some crazy thing. And last stock, the first one, as the last or the first, as you wish, Duolingo. This one I got it from Joseph Carson show, the Joseph Carson show. I don't know if you know this guy here. And he talks about it. He did a video or two about it. He also invested his money in it. I was really skeptic around December, something like that, end of the year. But now that it's down even more, I consider it a great bargain, a great opportunity, because it has great upside potential, great growth potential, and it has been re-rated because of the growth of the point company. But 63% down, and if you look at the financials, it's up, and up. It has like tripled in 3 years. 3 years it has tripled. Let's say in 2 years it has grown only 50%. It's going to be a great company. It's going to be re-rated at 7 earnings, price per earnings, if it's around 1 million and a half of revenue. It's going to be 7 or 8 of PE ratio, which is amazing. And this could be a great upside in the next 5 to 6, 7 years. Everything depending on AI, of course. The company is also getting crushed because of AI, concerns about AI, obviously, and also growth because it has slowed a little bit down. But if you look at revenue, it's amazing. And let's hear Joseph Carlson talk about this.
Subscription revenue makes up around 90% of their total revenue because they are a subscription-based company. What I see here with this most recent quarter is incredible economics. You have a company that is growing the subscription base over time. These users are also falling in love with the product, using it every single day. And we see that in the other numbers. For example, we have the monthly active users.
Yeah, everything is up. Monthly active users, paid subscribers, which is amazing. Like, this means people that want to learn a language, they will eventually buy this subscription to get the upsides of the app, and they will stay. They don't subscribe typically for like 1 month. They will subscribe for a lot of months, and also it's expanding the number of active paid users, which is amazing. Also, after in the video, he says that the CEO says now the company is really targeting the education, not really revenue. Well, all right, but it will grow, even though they don't target it, but it will grow. And that's my hope for the next year, 2 years, let's say, something like that it gets re-rated and gets a lot of upside. And right now, I think it's a good entry point at 133. You have, as I said, like 16 of P with a company that is growing. I mean, amazing, that is growing a lot. So it's a great bet. I have personally invested in a few shares of Duolingo. And that's it for the 5 bargains. I hope you really enjoyed the video. If so, if you are the one on the last minute of this video, I think you like me like at least, let's say, 10%. So if you do so, please subscribe. It makes it's free, and it makes me really proud to have. It will really make me proud to have a lot of you subscribing, and that means a lot to me because I'm putting these videos for you. I'm preparing it so that is more or less interesting. So please subscribe, and thank you for watching.